Okay, so just looking at the first chart, this is a perspective on markets over the year to date. The heavy blue line you can see on there is the UK market, which sadly fell the most in March and has recovered by the least, albeit it's perked up a little bit recently. The US in orange was strong out of the recovery. Moved more or less in line with the pack now. So Asia, US and emerging markets are all pretty strong, up about 12-13 year to date. Europe and Japan up about 7.5%. So what does that mean in terms of our asset allocation? Well, the colours here are, the green is where we've actively increased allocation to markets, and red is where we've actively reduced it. So just focusing on the middle column, balanced portfolio, you can see over the period Q4 19 to Q4 2020, we've increased equity allocation quite a lot. At a more granular level, we've reduced exposure to the UK and increased US, Europe and Japan. Asia Pacific has gone up from 8.9 to 9.8, well that's just with market growth over the period. We already had a high allocation to that sector, which has been good for us. That increased allocation has come out of alternative assets, absolute return in particular, more so than infrastructure and fixed income. Looking at style analysis, the three boxes across the top look at size of underlying companies, so large, mid and smaller, and then a value growth along the horizontal axis. Value companies which are better value versus expectations price-wise, and growth more expensive, obviously paying more for better quality earnings growth going forward. So in the box at the bottom is the summary of the three above. Our cautious to balanced portfolio, less impact here in terms of changes as less increase in equity exposure, more increase in equity exposure in balanced and speculative portfolios, and that's come in the mid-cap space. So large cap has gone down over the last 6 months, increase in mid-cap and smallers, and that slightly distorted the value growth perspective because our value's gone down and growth has gone up, which we wouldn't necessarily be looking to do at the moment, but because of the increased allocation to mid-cap, that tends to come through in the growth allocation. Consistent with that increase in equity, our exposure to defensive stocks goes down slightly, so 24.4% now. Sensitive stocks goes up, and that's mainly in the industrials and technology space. An allocation to increased allocation to Europe mid-size and smaller companies definitely improves that industrials allocation, and cyclical stocks similar. So what does that mean in terms of our overall performance? Our relative performance has been really good, and that's been as a consequence of an already high allocation to Asian emerging markets, but also our increased equity allocation in March and April this year. So just looking at the balance of speculative portfolio, for instance, in orange versus our peer group index, ARC steady growth in orange. You can see over the 12 months to date, we're up 1.35 versus ARC down minus 0.57. Year to date, minus 1.75 for us. Peer group index minus 4, plus 1.96 last 3 months. Peer group 0.5. And that increases, that relative improvement increases as you go up the risk profile. So very speculative, comparing the blue boxes. 4.86 12 months to date versus our peer group at minus 0.93, so a big differential there, and similar year to date, plus 1.07 against ARC at minus 5.3. Putting that into perspective against actual peers, and this is a peer group that we've analysed in our last 2 webinars as well, so it's exactly the same peer group. We've ranked it on year-to-date performance. Our cautious to balanced portfolio in this investment association 20 to 60 index, we come out top, minus 2.32, albeit negative. But most importantly, we come out top with the lowest level of risk 3-year standard deviation. So good risk-adjusted outperformance, and that's also consistent in the next risk profile up. And we've compared our balance of speculative and balanced risk portfolios in this sector Again, ranked on year-to-date performance, both of those risk profiles coming out top in the sector, again with very low risk, the lowest risk in the sector, again very good risk-adjusted outperformance. Thanks very much for listening, and look forward to providing another update in 4 to 6 weeks.